In this video, we are going to be analysing AVCT. Now, has been quite a big mover. Yesterday, I think it closed up around or pushed up about 20%. Today, we're now down 8%. So what are we paying attention to going forward? So again, as always, we always pull on the most kind of important charts to me from a technical standpoint. That's the 6-month and the 1-year standard deviation charts. So what can we see going from where we are now? So what are our closest support and resistances? So as of right now, 317 is our closest resistance, and we have no support. So the downside reason for that is what's happened to this stock. Basically from $50 down to $1. If a stock moves that much, again, very volatile, obviously shows us it's very weak, but it does also make the deviations very wide because, again, deviations don't account for volume. All they do account to is kind of price over time. And again, what do they, well, basically first deviations is where does 68% of the data trade within? And that's where 68% of the data should now trade within. So again, that's how they use, but on the longer term basis, what we normally look for, they are just too far. I mean, if we get a spike to the upside, 317 and 540 are our key resistances we're paying attention to. But really, if we're looking at this stock, we do want to trade it, we have to cut down to a shorter time frame. It's really the only way to be looking at it. So on the left, we now have a 30-day. On the right, we have a 90-day. Now, this is where we can now start to see, is there opportunity, is there not? And what we're really seeing now, right now on AVCT, is a key level. So obviously on the 30-day, we've broken through that first deviation. We're now getting that pullback as we always look for. And now it's all about, can we hold? Now, basically, this $1.05, basically use it as a dollar, and more as a psychological level as well. Again, you can kind of use it more as a zone. If this can hold, and again, probably want to be looking at it on a 1 or 4 hour will probably be sufficient. If we can kind of, as we kind of see now, we tested this level. If we can start closing above it, good indication that we are going to break higher. Because again, this is just a confirmation. You tend to see this 9 times out of 10. You break above the level, the standard deviation level, you come back to test it as a support, and if it holds, good indication we're going higher. And where would that target be? 135. Again, way to make the trade a bit safer is you can kind of wait for a key level to break. So I mean, you could be waiting for kind of the 118, but then you're only really getting a 1-to-1 risk to reward. And that's why I don't mind entering these kind of trades now. Let's say we get a close, at say 110. Cool, you have your stop at or just below $1. You're risking about 10-11 cents. You're still getting about a 2-to-1 because your target's still going to be 135. So again, that's why sometimes I prefer to enter early because, say 8 out of 10 times it will still work in the direction you want, but you're getting a lot more out of that trade and you're getting a much better risk to reward in that trade. So that's really what I'd be focusing now. Can this level hold? If so, a move to 135 is most likely. If we end up breaking to the downside, we have our fair value on the 30-day now at 75 cents. So that would be a likely target if we break below. And then obviously paying attention to the 52-week low at 69 cents. And then from there on, we again have no really standard deviation channels apart for 44 cents. But really, it would just be the key psychological level. We've been paying attention to 50 cents if we break to the downside. But I think the trading opportunities are going to be much stronger to the upside. That's more what I'd be paying attention to, trying to catch the momentum when it's here. So as of now, the momentum's kind of here. If we can get that long bias opportunity, it's quite good. I mean, we did kind of get it in the intraday or kind of yesterday. You saw we broke the level. We came back to retest it. We held, and that's when you got that good movement to the upside. We're kind of retesting it again. So again, if we can break to 135, we're paying attention to that. If we can break above that, we've got 165 as a next target, 195, and a final kind of level at 230. So again, these were what we'll be paying attention to more in a shorter term outlook. Again, the strongest trade opportunities are always going to be the longer term outlook. So obviously using that 6-month and using that 1-year chart, these are the levels that are going to be strong. If you want a really high probability setup, this is what I would be waiting for. But if you're a bit more impatient, maybe you're in the stock now or you're just looking for day trades, then the other levels will still work. They'll just, again, be less strong. So this is kind of what I'm paying attention to. Do you need to pay attention to all of these levels? No. Like we always say in these videos, yes, there is a lot of levels. This is to be prepared. Whether you're a short or long bias trader, you are prepared for if you get a big move either direction. That's why we kind of provide a lot of levels. But these are just levels where not only do we expect a movement too, but when they come into these movements, again, we always kind of expect that same pattern. A pullback the first time you attempt it, that can sometimes turn into a reversal. If you get the pullback but then instead break through, you're then looking for that retest. So again, pullback, break through, test it as a support. If it holds, again, good confirmation, we can most likely continue to the upside. So again, that's why we kind of provide these levels. Either direction, doesn't matter if you're a short or long bias trader. Again, if I have a bias on a stock, I don't want it to affect you, and that's why I provide levels to both the up and down side. Again, I'm actually not going to be trading something like AVCT. I don't trade small caps myself, but it's more from when I do the large caps, because the large caps are what I actually trade. I always like to provide levels to the up and down side, just so if I do have a bias on the stock, which you probably naturally do if you have a position in it, it doesn't affect the video or kind of how I would view stocks. So that's why I provide to both the up and down side. Anyway, I hope you enjoyed the breakdown on AVCT. If you did enjoy the video, why not drop a like and subscribe, and check out one of these 2 analysis videos.